So let's begin. And the question I ask can be addressed to anyone, all right? So the speakers, feel free to answer and give us your take. I think this one probably Ryan would be most accustomed to answering. This is the question concerning price escalation in the key cities of Malaysia versus the question of affordability. Just yesterday, I think, the Malaysia Insider featured an article where it claims that KL house prices are 5.4 times higher than the median income in the capital city. And so even the middle class requires some form of government subsidy in order for them to venture into property purchase. Would that change in terms of the profile of Malaysian buyership that you mentioned during your presentation?
Property prices in Malaysia has gone up quite a fair bit in the past maybe 7 to 10 years. And I think the issue now, like in Singapore, is that the younger generation finds it expensive. Okay, no different. I think the median, sorry, the ratio they use 4 or 5 times is also a similar figure that's happening in Singapore in terms of home ownership, right? So it's a challenge that all governments face. What the Malaysian government is trying to do is they're trying to introduce all these affordable housing schemes because we don't have a HDB or public housing program. So recently they have created something called Prima. Prima is a first home ownership program for the young Malaysians. And basically there are some regulation. For example, if you buy a Prima house, you cannot sell it for the first 10 years. And you have to be, I think, under a certain household income. So it's generally aimed at the affordability of the younger crowd. And I think they are building about some 200,000-300,000 Prima homes currently under construction. So they will come online in the next few years and should hopefully resolve some of these issues. Otherwise, we have this challenge because unlike Singapore, we don't have a public housing system. So the challenge for Malaysia, as I gave in my presentation, is the move from the middle income to the high income, and trying to get more efficiency out of the population. So if we do that, then we will see it happening. The other thing that I say why house prices in Malaysia are unlikely to fall is because of GST. Okay, and GST means that there's inflation. Inflation means that whatever is 500 ringgit per square foot today looks expensive, but in 5 years' time, actually 500 ringgit per square foot is actually not so expensive anymore, right? And when you see GST, you will see that I believe that incomes in Malaysia will rise quite considerably next few years. You won't see immediately. You will see in next few years when they raise, and then because of inflation effect, and then 500 ringgit per square foot will not look so expensive anymore, right? And the cycle will continue after that.
So this is a follow-up question for you. I think because you've taken the longest rest, the rest of the speakers just spoken. Yeah, so this is not picking on you. Yeah,
Sure.
There is a view that KL has a tested and proven secondary market as well as leasing market. Is that true, or is that just coffee shop talk?
There is. In fact, I would say there's a very big misconception in Singapore that Malaysia doesn't have a rental market, doesn't have a secondary market. Actually, that's very wrong. There is a very deep resale market as well as a rental market. The problem, as I mentioned, why a lot of people in Singapore find that they find it difficult to rent or sell is because basically you have, generally speaking, bought the wrong product, which is probably a problem because you only see whatever is marketed to you in Singapore. Right, you don't see the projects that are fully sold in Malaysia, bought by Malaysian locals. So if you see the mass market segment properties, they do very well. There's a very deep. I transact a lot of my own properties, and they sell very well. They rent very well. I don't see a problem. But I can understand when people can tell me, Ryan, my property X cannot rent, cannot sell, and I ask them what property you buy, and then when they tell me that don't know how to help you, it'll be hard to help you because you started off on the wrong footing already. So when you start on the wrong footing, it's difficult, right? It's generally speaking difficult. And I think, and when things get difficult for you, your next thing you think is, I want to exit as fast as possible, sell. And then you even sometimes cut price, lost money because you just want to exit. And then that's why you have a very bad experience with Malaysian real estate. You must understand, end of the day, that property is a 5-10 year game, and if you can wait 5-10 years, right, you will see a return. Okay, the problem is that we try and shortcut our way out, and that's where you lose money and you have face that problem. The other thing is you must have a very deep understanding of what locals buy, what locals want. Yeah, then so I repeat, there is no such thing as a no rental market or no resale market. It exists, okay, in Malaysia. Okay.
There's another view that landed is better than apartments. Your comments?
Landed is a traditional preferred by the Malaysian locals because traditionally we have a lot of land, so you can, of course, why buy a condo when you can buy a landed? But as the urban sprawl happens, you know, as the city grows bigger and bigger sideways, then you realize that the highway get more and more jam, and you are staying further and further away from your workplace. Now you can see that in KL and Penang, it's acceptable to buy high-rise apartments nearer to the city, because otherwise I'm living too far away. So there is even a limit to the urban sprawl. At some point they cannot accept. And which is why things like MRT, when they happen, will make living in the city even more acceptable, because now you reduce your travel time to work. Okay, so you can see this in KL and in Penang. Okay, Johor Bahru, not yet. You go speak to a Johor local, he will say that, oh, buy condo, you must be out of your mind. Why must I stay in a condo when I can buy landed? Because JB has not reached a stage where our urban sprawl has reached that point, but it will. It will. History has already shown us Penang, KL, Malaysians can accept it. So I assume JB will reach this point sometime in the future, where local also will say, why I want to buy 30 kilometers away from the city center when I can buy something in the CBD or nearer to town for X amount of price, because I don't want to travel so far. So it's a mindset thing, and will happen as the city gets more urbanized. Okay, which actually, again, to repeat, if you see the opportunity here, JB has not reached a point, so ideally you try and get in before it becomes this stage. Yeah.
Thank you, Ryan. We'll give you a break, all right? Yeah.
Thank you.
We go on to currency, and I think, Alfred, you gave us quite a lucid illustration of how currency can actually have an impact on property investment and how the Sing dollar fared over the years. Just a question. For example, ringgit is now 1 to 3, right? And if I were to buy a Malaysia property now, of course, the exchange rate will augur well for me. It will be in my favor. But if I were to exit, right, and I am faced with the same currency situation, it will not be in my favor. In fact, it will be in my disfavor. Yeah. How do we manage such currency risks and fluctuations?
Well, actually, Ryan gave a very good illustration about the Malaysia properties, which actually really sounded very confusing. So if I want to buy, I better look for him. Otherwise, I would look at SRX to look at Singapore property. Then I don't have the issue and headache about Sing dollar. But yeah, like what you mentioned is true. Take for example, I have some Malaysian friends who actually bought Singapore properties when the exchange rate was about 1 to 230, 240. So today, they are a very happy bunch. They not only make from the property appreciations, they also benefited from the exchange rate, or you can say that they actually hedge against their currency. So now they actually are working in Malaysia, but they actually can able to transfer their money that they make in Singapore back to Malaysia and enjoy their high standard of livings. But currency, like what I mentioned, is really a very important factor. I think a lot of Singaporeans, when they invest overseas, they have ignored these facts. Or maybe some of the time people actually say, hey, it's actually very worthwhile. But the other thing is that Singaporeans, we always tend to compare prices overseas as compared to ours. I mean, Singapore is actually rather unique situations. I mean, we have gone through the last 50 years of nation buildings, and we have come to a level where we can enjoy a rather high quality of life, and we look at our quality of properties, whether is it HDB or private, the price appreciation has gone up a lot. But like what Ryan has pointed out, like Malaysia is such a big country. We cannot use our standards that we are accustomed to overlay into Johor or KL, because just in these two states itself, the way that the consumer behave, property investors behave is really so different. So I think currency, there is no end to it, but like what I mentioned, Sing dollar over the long run, because of our government policies, will strengthen. during the pockets, that means the economic cycles, if you have a high risk profile and you think that you can read the markets, then there may be some opportunities for you to take advantage of the low ringgit. Because I do not think ringgit, if Malaysia is governed well, will stay at this level. Because whatever it is a country full of resources, much more than Singapore.
Thank you, Alfred, for the insight. Ryan, you wanted to add? Yeah.
Just now, Alfred had a very good slide. You remember he showed you the ringgit appreciation, ringgit trend versus the property price trend. You notice that even with ringgit appreciation, you still make money end of the day out of the property appreciation. Of course, that's over 10 years. And that's the end point. You cannot expect 3-year time frame, 4-year time frame, and then you want to make big money out of property, right? You have to give the property inflation take place over 10 years, and even if you experience depreciation, you will still make money out of the appreciation of the property itself. Now, I tell people, if you have a Malaysian property today, you want to sell now, you are shooting yourself in the foot. It's the worst time to sell. Worst time to sell. You try and sell now, you're just killing yourself. Okay? And I know a lot of people have this tendency to try and sell now, oh, market bad, will go down some more. But then what happened? You are just following herd mentality. Okay, that's the truth, right? And unfortunately, in Singapore, herd mentality very strong. So, so I try to tell people, don't. You worst time to sell. Buyers are few, sellers are many. Ringgit going down. Why you want to make yourself difficult life, right? When market going up, that time you don't want to sell. You say can go up some more. Now market going down, you want to sell. So you are shooting yourself. So, don't say Malaysia bad. Is your timing no good, okay?
I can understand your defense of Malaysia. Yeah. But I like to add that herd instinct is human nature.
Yes.
It's everywhere.
Yes.
Yeah. This is a question for Ada. Question from the floor, and let me just read it for us. What are the emerging markets, for example, Vietnam, Cambodia, etc., that we should look into? Which property classes to look at?
Can I just also back to the question that you have about the currency? I think Hong Kong will be another market that you can consider because our currency is pegged to the US dollar. So you have basically removed this factor. So back to your question about which are the emerging markets. Remember that the slides that I first put out, the 3 markets which are going to enjoy higher GDP growth, India, Philippines, and Vietnam. I think these will be the key markets that we are looking into. Among these 3 markets, if I look from the commercial property of view, is India and the Philippines that have a higher interest because they are the business process outsourcing centers, which means that JP Morgan, all those banks are putting their back offices in those markets. So this boosts the office and also the housing because they increase the middle class that work for those JP Morgan and Citibank. So they will have the lateral tendency to buy into the housing. This is also what we are seeing in terms of India, for example. I don't want to comment on the individual investors, but some of the major institutional investors, including those in Singapore, are investing in India housing as well.
Thank you, Ada. Since you are at it, just asking for your views on the profile of buyers or investors into the commercial markets that you highlighted earlier on. Would they be primarily more institutional, or are they retail or individual investors?
I think across this region, it does vary across this region. So for some of the markets like Singapore, they will have more institutional buyers. Hong Kong have a lot of private investors, and Japan is dominated by REITs. But for the general public, I think one point I want to mention is there are more pension funds and insurance companies buying into real estate. So where do they source those money is from private investors.
Thank you. We come to Singapore, and this is a question that is fresh from the National Day rally, right? And I think those who are Singaporeans can answer. What is the impact on the private housing market in Singapore after the latest government announcements of the rise in income ceilings for both HDB, BTO, and executive condominium? Yep. Jeremy, you want to help us?
All right. Okay, so during the rally, PM mentioned two changes, right? For HDB is the income ceiling has increased from 10K to 12K, and for EC it's 12 to 14K, so it's about a 2K increase. And that increase came from the back of I think a previous increase. It's quite recent, I think 2011 if I'm not mistaken. So it was increased also 2K at that time. And so generally that increase, if you look from the supply and demand perspective, it will take away the same set group of people who would generally want to buy a resale market. Now this group of people, because their income is now eligible, they are more likely to consider getting either EC or BTO. So it will have a downward pressure on the supply on the resale supply, or rather the demand of the resale market. If you look at the supply, on the supply just now I mentioned quite a fair bit, whether is it HDB or is it on private side, there is an increase in supply in the next couple of years. So in a way, by having the income ceiling raised, the demand on the resale market will have a pressure on it. So prices are likely to continue to moderate downwards if all things being equal. And the other consideration obviously is that when prices go down, people who wants to buy resale properties for whatever reason, and generally the main reason that we see is because people want to have a choice of staying in mature estates instead of having to go to a BTO that's usually on the outskirts. So for this group of people, they may have better choices, and when prices come down, there is also a drive for them to purchase these properties. Okay, one thing I just want to mention is that since the last election, I think probably in 2011, the government has unpacked their BTO prices from the resale market. So in other words, in the past, they usually look at what the resale prices are, and then they will benchmark that with the BTO launch prices. But since they unpacked that, we have seen also that BTO launch prices have come down, have had a much more significant discount over the resale prices. So today, we see about at least 18 to 33% discount, if not more than that, up to 50%. If you look at the recent Punggol BTO, the North Shore, you will see that in some instances it's about 50% discount. And so that's very attractive for people who don't mind waiting for a BTO, or who don't mind staying further away. But as prices come down, the resale market also becomes a little bit more attractive. In terms of numbers, what we have seen is that the market seems to have bottomed up last year in terms of transaction volume. Because this year, there's an increase in transaction volume, whether is it HDB or private resale market. And so we can expect the trend to continue. So there is an upward pressure in terms of volume, but there is still a slight downward pressure because of what was announced during the rally. So people who would have otherwise chosen a resale market because they're not eligible to buy a BTO or EC will now have another choice, right? Okay, so that's general.
Thank you, Alfred. You have some comments?
Just to add on, because HDB, there is this thing called MSR, Mortgage Servicing Ratio, which was introduced in 2013. So actually, after this has been introduced, there is definitely a softening of the HDB prices. I think the government have not changed in their policy about asset enhancement. If you are a Singaporean buying the property for the first time, definitely you will have the first bite of cherry, where you would be able to enjoy the appreciation of the property prices. But because the resale price has actually softened, and mainly due to the MSR, Mortgage Servicing Ratio, because ever since they have introduced MSR, do you know that it's actually, you can buy a private condominiums, you can afford to buy a private condominiums because it's based on the 60% TDSR, and yet you cannot afford to buy an executive condo because it's based on 30% MSR. So by increasing this limit, they are actually doing some balancing effect. Yeah, of course, this is my view, but I think it's largely a very welcome move, because it also just highlights Singapore income has really gone up. So the middle class, where you are earning about $7,000 to $8,000, which actually is a good income, right? But actually, it's the worst group. We are the sandwich class. So therefore, having this is giving us more options. But I hope that this one will stabilize the HDB market, because remember MSR? So where people cannot buy the HDB flat that they want, or the type of flat that they want because of MSR, now they can actually have a bigger pool of buyers. And hopefully this will be allow those upgraders to be able to upgrade their properties to the private condominiums. And of course, if the price remain weak, then this will be a very good time for HDB upgraders to upgrade the property price to the other level. Because I think the government has learned from experience is that they do not want a resale market to have a runaway again. I mean, for HDB prices to go up by double digit every year is really defeat the purpose of public housing. But at the same time, they also want Singaporeans to be able to enjoy the kind of appreciations.
Fred, to pick your brain on the EC market, because the income ceiling has also been raised for the EC market, and if I remember correctly, before the resale levy was implemented, EC developers actually sold probably 50 to at most 60% of their stock. And after the resale levy was implemented, I think EC developers felt a certain hiatus in the move of these units. Would this raise in income ceiling help to move more units in the EC market?
Well, actually, of course, there's some market talk. This one is to help the EC developers. But I think it's a broader sense of the policies. But definitely, it will help. And if you qualify, I would recommend you to consider to buy brand new EC. I mean, of course, you know I'm objective. I'm not selling any EC here, yeah? You can probably check your night, Frank. But the thing is, why I say you should buy EC? Because EC, brand new EC, you are still affected by this 30% MSR. So now the pool of buyers that can afford to buy EC actually have reduced. No? But 5 years later, your EC that can actually do resale to fellow Singaporeans and PR, the new buyer is not subject to 30% MSR. They are subject to 60% TDSR. So you are buying in at a low price, and when you 5 years times, right, you can then have a bigger pool of buyers where they can have a higher loan eligibility. 10 years time, your EC become privatized, right? Which is why our ministers say buying EC is like buying Lexus at the price of Toyota. So would you want to go and buy a Lexus now?
Thank you. This question comes from the floor, and it's addressed to Ada. What is the outlook of residential and commercial properties of Taiwan? Is pricing going down? And I'll just ask Ada.
It's quite interesting to know that someone is interested in Taiwan. Just from the macro point of view, for Taiwan, not sure whether you know, they are going to implement a capital gains tax in replacement of the luxury tax. So for foreigners, I think the taxation will be much higher. So this is one concern about investing in Taiwan. The second concern is no matter it's commercial or the residential property sector, the yield is extremely low. I think residential is about 1%. Commercial is 2.3%. Commercial, I have more concern because over half of the commercial properties have been acquired by insurance companies in Taiwan, but they are now investing in overseas market. You may see some of the news, they are buying in London. So that's the concern. I think on a more personal level, I think there is still some opportunities to buy in the in-town area of Taiwan, Taipei, because basically there's low land, and also, you know, those land sites, from what I heard, it's very, very difficult to do the urban regeneration in Taiwan. So those old buildings, it's very, very difficult to lock it down and rebuild. So I hope this answers your questions.
Well, whoever asked this question can talk to Ada if you haven't been answered. But let's move on. Malaysia is very popular today, and we're back to Ryan. Ryan, I'm just going to read out this question as it is. And I don't know whether you can comment on behalf of the Malaysian government, but you try. Yeah. Dangerous waters here. Yeah. Why Malaysian government allows different minimum capital purchases? A, no minimum. B, $500,000 ringgit. C, 1 million ringgit. Sounds like an exam question.
Malaysian government, there's two governments. Malaysia, okay, three actually, you want to be accurate. There's the federal government, which is the KL, and federal, that means the so-called central authority, and then each state has their own government. So the state government and the federal government are two different bunch of guys, not the same bunch of people. So, and federal government and state government have different powers. So land is under state government. So state government decide. So Johor decide what they want to do with land. Malacca decide what they want to do with land. Selangor does the same. So actually today, you may think Johor is quite complicated. Actually, the most difficult for foreigner to buy today in Malaysia actually is Selangor. Selangor has very ridiculous requirements for foreigners. So you want to buy in Selangor like PJ, all these are very difficult for foreigner today. The requirements are very high. So Johor has Johor got 2 cases, 1 million normally, and Medini actually is 0. They have no requirement. Medini is supposed to be a foreigner-driven place. Okay, so that's how it works. I hope that answers the question. Why do they allow all this? They can, because by law that's what the power of the state is, right? So the state decides what is the appropriate figure for their state, right? And of course the state and the federal can be same party, right? In the case of Johor, it's Barisan Nasional, and again federal is also Barisan Nasional, right? In Penang, it's a different party, and so on and so forth. But they are different people make decisions. Okay, so sometimes you see why why some politicians make some funny statement and then some politicians make another more sensible statements, because they sit at different level of government and they decide on different things. Okay, so that's why sometimes you see the inconsistency. Some of you like to call it flip-flop or prata, or that actually is what happens is different people think differently, because at their level they think this is correct, at another level they think that's correct. So that's why you see this inconsistency. Unlike Singapore, which is more straightforward. Okay, so Malaysia, the government system is different, right? It's like a bit like US in that sense.
This question from the floor takes you to East Malaysia now, to places like Kuching. And before you imagine the hotel resorts there, it's about whether it's good to buy a landed property in East Malaysia or sell, either way.
Sabah Sarawak in past 5-10 years, I think a lot of boom in real estate, because what happened is there was a bull run in commodity, then suddenly overnight a lot of people become very, very rich in Sabah Sarawak. So they take the money and then they go and pump it into real estate. So the next big thing they thought they can make money is they go and pump the real estate. So a lot of people, palm oil people become property developer overnight. And then they become rich because, again, the Sabahan don't know where to put the money, the Sarawakian don't know where to put the money, so they put it into property. So you'll be very surprised some property price in Sabah, in Kota Kinabalu is actually higher than KL. Very, very high. In fact, it's ridiculously expensive considering that it's Kota Kinabalu. So would it be good to buy a landed property? I think, again, you have to understand basic issue. You have to be concerned about rural-urban migration. A lot of people from Sabah Sarawak go to KL, JB Penang for work, because again, KK and Kuching may not have sufficient job opportunities for the young. You have to consider that back in point. Well, you may want to buy landed property, yes, but again, and you must understand the land mass for Sabah Sarawak is again a lot bigger than the land mass on Western Malaysia. Right? If you talk about want to buy land now, but you must understand the land mass is very different. And population density is much higher in the West than it is in East Malaysia. So you have to consider all these factors in mind. Okay, so although they're building very nice properties now, but it's again for a very limited crowd in my opinion. But East Malaysians are buying property because they got a lot of money now, so they're going everywhere to buy property. They are the richest people in Malaysia right now, if you ask me, compared to the Western guys. Yeah.
Thank you, Ryan. There's a question actually for Ada concerning Japan property investment.
Yep, so from the slide that I've pulled out, I guess I've already stressed several times, Japan is right the hotspot across this Asia-Pacific region. For the outlook of Japan, I think they are still having 1 or 2 years to go in terms of their positive growth. The concern is more around 2017 when they have the second increase in their consumer tax. So we are thinking that many of the activities will be front-loaded in 2016. So 2016, you will still see quite a lot of growth, but after 2017, you will see some of the issues. So I think for Japan, my advice is stick to Tokyo, stick to the core investments, and stick to the sectors that are benefit from the weak yen. So my pick will be hotel.
Hotel investments, stick to Tokyo. Last question from the floor. And so after this, I've been instructed to round off. If not, there will be an opening here and all of us will drop in. Yeah. Okay, this is about Australia. Any one of us can help? Okay, Ryan says okay. That's what he means, right? Is it a good...
Even Japan also, I can say, I have a point on Japan. My point on Japan basically is, which is the opposite of Malaysia, is that the population is shrinking and people are getting older, right? Tokyo is the only place you can buy today in Japan, because if you go anywhere else outside Japan, in there are abandoned houses because all the old people die and no one take over the house. Basically, that's what's happening in outer parts of Japan. So that's why today you only can buy Japan apartments where the vacancy rate is very low, occupancy very high, because everybody go to CBD urban area to stay. All the rural area all gone case.
So for Australia, which city is a good time to enter now? I suppose Australian currency is just below Singapore.
My theory for investing in Australia is that it's an aspirational property. You want to say yields in Australia are fantastic, also not to say very fantastic compared to the mortgage price. But a lot of people buy Australia because it's a great place to live. And from that sense, demand for Australia is very strong. From that sense. So the popular places like Melbourne, Sydney, all these places are doing very well because simply people like to live in Australia. That's if you ask me, that's the reason why Australia does so well. You talk from a purely financial perspective, actually nothing very great lah, right? Of course, quantum is low and all that. So people buy, and because of the Chinese in recent years, I was in Sydney early this year. There was like this stick, listings in Chinese for Sydney property. This stick, you can imagine, all in Chinese. Even the Guilo agent also posting in Chinese because he want to get Chinese market. So it's so driven by this type of buyers. And the Chinese buy there because they like it, they love the place, and they flood the whole Australia. But I think from a purely number perspective, I don't see anything great lah. But people like to buy because it's aspirational, it's a lifestyle product that people buy. And a lot of children study in Australia, and people buy Australia for those reasons.
Thank you. Alfred, you have any further comments?
Well, I mean, Australia actually, from an economic point of view, they are also now having some slowdown. Okay, but again, the next upswing will depend largely on China. And China, of course, they are now going through a series of reforms. I mean, as far as investing in China, I always believe the best way is to invest through a China funds, especially the unit trust that can invest into China, A-share, and H share, where they have the flexibility to be in and out. I definitely has a long-term bullish view on China, because now being the second largest world economies, if this economy do not take off, it will be very difficult to drag on to pull up the rest of the region. In fact, the whole Asian region will now largely look on China. And of course, after the reform that China has for all their state-owned enterprise, the next thing will be infrastructure. They need to build roads, railways, buildings, and this would then in turn spur up the demands for commodities, and this would then help Australia. Of course, now a lot of Chinese buyers are going to Australia. So is there any over bubble kind of situations? Right, it depends on city, and what Ryan has illustrated on Malaysia, Australia is the same thing, because Sydney is more happening, Melbourne is more quiet. Brisbane seems to be the up and coming one, but where is the right place to be? This is where you need to exercise your cautious. But if based on the whole macro logic, in the next few years, and if China take off, Australia will benefit, and it will benefit Aussie dollars. So purely from a currency point of view, you will have a very big upside from that point. As far as Australia property overall, the government there, I think, have a very good control. For example, only as a foreigners, you can only buy brand new one. Now they are going very hard to catch those people who have actually bypass some of the loopholes to buy the resale property. Then the resale property is only for the locals and PR. So in that sense, Australia property market has been consistent. So like what Ryan say, nothing too much to shout about. But I think for sometimes for properties, for overall economy, it's better to be consistent than to really have an up and down. I mean, I don't know about you, I'm getting old. I cannot take that kind of heart attack.
Maybe I have a just point to make. In terms of the sensitivity to the foreign demand, we can see that Australia should be pretty much one of the highest, right? Because they have this specific rule that you alluded to, that we have to be careful. As a foreigner, if you buy an Australian property, you cannot sell to another foreigner. You have to sell it to the locals. So bear that in mind, that is not something in Singapore nor in Malaysia, for that matter. So we have to understand the implications of such a rule. In the case of Singapore, for example, you can see that in certain areas like District 9 is quite anemic, Orchard, because that is pretty much a lot of foreign investors and companies would buy in that area, and it is not doing that well fundamentally at this stage. So that is very sensitive to foreign demand. And so we have to, as investors, take into account the various kind of rules and laws in a different jurisdiction and how that impacts your property investments. Whether is it right or wrong, good or no good, depends a lot on how much you study the market and the profile. Just have to keep in mind some of these things.
Final parting shot from Ada.
Just back to Australia, I think what we are seeing is the different performance across different cities. At the moment, I think Sydney and Melbourne do outperform the rest of the country. And just from the commercial property point of view, I think there is already seeing some improvement in terms of the demand. In fact, a lot of the older commercial property is now being redeveloped into residential properties and sold to the Asian kind of buyers. Yeah, I think just so add to one more point is that the type of the housing that the investors are investing. So it's not only about the Asian investors. If I just been back from Sydney a month ago, and the people there, particularly the younger generation, they do think that it's better to stay in the city area instead of living with their family in the houses, in landed houses outside the city. So I think this is also a fundamental push for the housing market.
Thank you so much. Would you join me in a round of applause to our speakers? We make them work very hard